to also think about numericals and we need to understand the calculation part. So let's talk about accommodation. As I said, the 10 lakh it is 7.5% salary, 10 to 25, 10% of salary, and above 25 lakhs, it's 15% of salary is my valuation. And if it is not owned by employer, then 15% of salary is just throughout. Whatever the value of furniture, we have to pay 10% cost of that furniture. If the furniture is taken on rent, then the value of rent will be added as additional valuation. Let's take example. Venugopal is government employee. During previous year, he was given rent-free furnished flat at Hyderabad. The license fee as per government was 2,200 and fair market value was 15,000 per month. The appliances provided to him was costing 40,000. The depreciation for same was 5,000. Employer pays 20,000 as hire charges for two air conditions. You have to find out value of perquisites. Please see here, he is a government employee. Okay. So valuation of his perquisite will be now he is paying 2,200. So we'll consider the value as 2,200 plus furniture which he is having. So he is getting 40,000, the cost of furniture. So 10% of furniture is 4,000. Then he has hired 20,000 two air conditions. So total will be 24,000 value of furniture. So rent paid 2,200, furniture 24,000. So total value of his flat will be 26,200. Now depreciation is not part of income tax when you're calculating. If we are calculating for business, we can calculate the depreciation and then we can adjust about the figure. So please read the numerical and its solution and then I will re-explain. So let's talk about again. He has flat of 2,200. Now the fair market was 15,000 per annum. But we ignore fair market. We always talk about the benefit he has taken. So what we have done, we have first find out the benefit he has received is 2,200. So the price will be same. Now whatever the furniture he has received, the value will be added, that is 10%. So cost of his furniture provided was 40,000 and 10% of that 40,000 is 4,000. He also provided two air conditioners. So cost is 20,000. So we straightforward added this. And what we find 24,000 is value of furniture provided. So 2,200 was his license fee. Plus 2,400 is value of furniture. Then its value of perquisite becomes 26,000. 200. Any doubt? Please post in chat box or I will proceed further. Okay, let's move further. Vishwanath is employee of private company working at Madurai, where the population is 18 lakhs. His salary is 60,000 and 5,000 is DA. He has 6,000 commission. Company provide him a furnished house at 5,000 per annum. Gas, water, electricity bills paid by employer 4,000 and 6,000. Where to decide the value of perquisites. Now let's find out the value. He has salary of 60,000. So his basic salary 60,000. He has received 5,000 as DA and 6,000 as commission. So if I add this, my total salary will become 71,000. So value of perquisite is at 10% because since the accommodation which is provided is owned by company, and if it is owned by company, then the value will be company is zero. Whatever the charges are required, they are calculated based on the value of total assets. Let me show you the provision again. If the accommodation is owned by employer and population is between 10 to 25 lakhs, now the population is 18 lakhs. So it is 10% of salary if the accommodation price is not given. So here the price of accommodation is given as 5,000 per annum. So we calculate directly based on 10% since his population is 18 lakhs. Take the another example. Pandian is an employee of a company at Delhi. Now first, Delhi is a metro city. The population is 25 lakh and he has monthly salary of 3,000. He receives bonus of 2 months every year and allowance of 300 per month. He is provided rent-free accommodation owned by company at rental value of the same is 10,000. Now let's find out first unfurnished and then furnished. The salary he is earning 3,000 per month, so it is 36,000 plus bonus that is 3,000 into 2 is 6,000 and entertainment allowance is 3,600. So his salary becomes 45,600. Now since population is 25 lakh, if it is more than 25 lakhs, it is a 15%. So value of perquisite will be 45,000 into 15%, it is 6,840. So we're not going to calculate the other perquisite and so on. So these are the valuations. We already learn about same medical reimbursement. Now, this was about income from salary. As per suggestion by some of the students, I'm just revising illustration for capital gain and then we'll proceed for calculation of how to income tax returns are filed. So let's have numerical illustration for capital gain. Capital gain is a difference between sales price and purchase price, which I calculate. And if it exceeds its cost price, then I need to calculate the gain which I have achieved. And that gain difference is amounted toward the profitability. So what is the capital gain? Profit earned by selling off an capital asset for more than the ordinary paid is creating taxable value. In capital gain, the assets which are covered are stocks, bonds, real estate, collectibles, cryptocurrency, and other investment source which are used for investment purposes. If in case my sale proceeding, that is, if I purchase asset for 10 rupees and sell at 9 rupees, it is called capital loss. Whereas if my sales is more, that is, I purchase at 10 rupees and sell at 20 rupees, the 10 rupees will be called as my capital gain. So here we are interested for extra sales proceeding which I'm getting. Why capital gain is important? Because it involves a large sum of money and it involves transactional process where sale and purchase of assets is being effected. So when I sell or purchase capital asset, I have larger unrealized capital gains, and that gains are accounted toward the profit. And that's why they are being calculated and analyzed for calculating loss or profit. And whatever the loss or profit, that becomes a liability towards paying tax. So this is an example how the capital gain is calculated. Rupees 5,000 was the cost price and rupees 8,000 was sales price of a capital asset. So I purchase it for 5,000 and I sell it for 8,000. The difference between sales price and purchase price, that is rupees 3,000, is considered as capital gain. And in this transaction, this 3,000 will be amounted and transferred for taxation calculation as capital gain. So let's talk about further discussion. If any gain is for short term, that is for below 1 year, it is short term. If any gain which is more than 1 year, it is long term. For short term capital gain, we did not have deductions, whereas in long term capital gain, we have index valuations where cost of improvement and cost of assets are being calculated. Let's consider two, three examples. I purchase the shares at 5,000 and sell it at 6,000. Now, for a share, more than 3 months is the long term. But since it's in 1 year, it will not use index cost of valuation. So, whatever the extra 1,000 I'm getting, it is charged at 40% as capital gain. Suppose I purchase shares at 5,000 and after holding 2 years, if I sell the shares at 8,000, then I need to find out index cost of valuation. So let me share the Excel sheet for you. So I'll just zoom out for your visibility. I purchased on 1978 at rupees 5,000. I sell in 2000, suppose for 85,000. Now, if this is type of asset and if I calculate the period, it is almost 22 years I am holding the asset. And if I just calculate here the gain, then this minus this, my gain will be 80,000. So technically, I'm holding the asset for 20 years and my gain is of 22 years is 80,000. But when it is a long term, that is more than asset, we have something called as index value. For example, let us assume for 1978, index was 300, and when I sell in 2000, index is 478. So when I'm going to find out sales price for 2000, then what I'll do, I'll find out the purchase price for 2000. So 5000 was the purchase price. Then what is index of selling year into index of selling year divided by index of purchase year. So I have the price of goods as 7,966.67. And now I will find gain or loss after deducting 85,000 minus this value. So this is my long-term capital gain. Suppose in this numerical, I said it 2000, but I constructed first floor in 1985. The cost of construction of first floor was 15,000. I constructed second floor in 1995. Sorry, in 1995 or 98, suppose. The cost of floor is 26,000. Now I required index, so I write down index is 350 and 425. These all index values are given by income tax as index price. So when I'm now calculating the cost, let me take this sales down. Now when I find a cost, if I just take a total, it is 46,000 plus. But problem is that from 1978 to 1998, what is the last 20 years changes, the price is changing. So let's find out the price of first floor. So again, 15,000 into selling year index divided by the base year index. The value will be, sorry, into 15,000. The value will be 20,485. Now let's find out for second floor valuation. So it is 26,000 into 478 divided by 425. So if I now calculate the gain, it is 57,694.7 gain I have, sorry, cost I have paid, and income is this. So in this case, my gain will be 85,000 minus 57,000, and it is 27,305. So in case of long-term capital gain, I being charged about the indexation. These all index are mentioned by Income Tax Act. So any doubt in this calculation or anything shall I repeat? Okay, let's move further. I'll reshare the PPT. So in capital gain, I should plan, I should calculate, and I should execute the gain by having proper focus and planning. For capital gain asset management, I need to have patience and long-term visibility to understand loss or profit due to the accumulations and changes. The capital loss is also allowed to carry forward for 4 consecutive years as per provision of Indian income tax. So if I have loss, I can forward it for 4 years, but only loss of long-term capital gain is allowed more than one financial year. Whereas if it is short-term financial loss, it need to be adjusted in that year only. Now let's consider three special cases. The first, if inherited assets are received on stop-up basis to current market price, then we have to maintain the original owner's price. For example, if due to death or certain casualty I received as a last will the asset, then these assets are given to me as free of cost because I'm not going to pay anything. So in that case, the assets are charged to the original price only. If certain properties are exempted to pay the tax by government, then such exempted properties are valued at fair market price rather than the cost price. And the collectibles, if have, that means if I'm having some gold, gems, and jewelries, then the valuation of such perquisites or such assets will be at its original cost. Now let's talk about how to minimize capital gain. The capital gain can be minimized using the strategy of reinvestment, reallocation, and diversification of gain what we receive. We need to plan the holding of asset in such a way that it will generate maximum returns and minimize the tax burden on us. We have to ensure the cash flow of capital asset is a continuation form and being helpful for calculation and estimations. We have to do the harvesting of capital assets and ensure the tax exemptions are maximum clean. And in the last, we need to have tax advance accounts and documentation ready to claim for exemptions if applied. So this was our capital gain analysis. Very small numericals are normally asked on capital gain, but if you practice in personal or in professional life, the capital gain decisions are most vital because they are involved a large sum of money. So that's about capital gain. Now I'll share the PPT for income tax return filing. So let's discuss the second last part of this levels. So tomorrow's session for direct tax will be last session for direct taxation, and we'll only go with advanced financial management till Friday because we are finished direct taxation and we have to now go with the chapter called capital budgeting. And after working capital, we also finish advanced financial management. So please submit all CC and ensure compliance with internal evaluation. So let's talk about income tax return filing in India. This is also known as ITR filing. Now, who is required to file the ITR? Every taxpayer, it can be business or individual, is required an obligation commitment to file income tax returns. This income tax return is assessment of previous year income and the tax liability of an individual with regards to the previous year returns. Why to file? It is the first thing is the legal compliance and it is a financial declaration that what is your source of income and how much is your earning. Based on that, you are going to calculate and endorse your liability based on income level you earn and prescribe tax percentage. Now, as per Indian income tax, who is required to pay the tax? Any individual whose income is more than 2.5 lakhs, it is required to file a return. If a resident is individual or karta or company and other entitles which are in a bracket of taxable income requires to file the income tax return. In case of companies, it is suggested to file a return to take the tax credit benefits. Otherwise, if they do not file a returns, the tax concession or setup or carry forward or TDS effects will not be endorsed for them. Since they are not registered, they cannot claim any benefits like this. In 2025, more than 6 crores are people who are actually filing tax. Then, how to prepare your filing income tax return? Let's talk. First, gather the eligible and correct documents. The first is PAN card. PAN card is permanent account number, which is mandatory to link with individual and his tax liability. Whenever he purchase or sale or transfer of larger sum of money, he need to mention the PAN card, and this way the PAN card keeps a track of his expenses. A person should have also details of various bank accounts he is holding, the nature of bank accounts, and the pattern of investment or holding the accounts, along with a rate of interest he has received. He should carry income interest certificate from banks before filing income tax return. The salary person required Form 16 from employer and TDS certificates of tax deduction as per Form 26A-S. Similarly, if any tax exemption is calculated, the person need to follow and have the evidence or proofs to be displayed while calculation of tax liability. Now, which ITR to be selected? ITR 1, that is income tax return 1, is selected for those individuals whose income is below 50 lakhs and have only one house property, whereas ITR 2, 3, and 4 They are selected for complex incomes, which include business and profits, capital gain, and multiple sources. So if I have only one source of income, I will choose ITR 1. But if I have multiple sources of income, then I will choose ITR 2, ITR 3, and ITR 4. Depend on types of source of income. Let's understand the step-by-step process. Let me show you the first the site of income tax. Then we'll come back to this. So this is income tax website, and it is suggested that all of you please visit the website and do the working for you. For example, here we'll find individual tab. In the individual tab, we have guidance to file the tax return, return form applicables, tax slabs, and all the information. So let's find out guidance for filing return. So what is ITR 1 manual? As per ITR 1, this is applicable to the taxpayer, okay, for a required PAN card. I should be Indian resident, normal, and I'm registered for online filing. The purpose of ITR 1 is a resident individual who fulfill the criteria. What is the criteria? His income has various source, but not more than 50 lakhs. I just zoom it. So if my income is 50 lakhs and below, if income from salary, house property, family pension, agriculture income, long-term capital gain is up to 1.25 lakhs, and if this following income includes, then only I can use ITR 1. If I cross the income limits or I'm using any other source of income, then I will be charged for ITR 2, 3, and 4. It covers interest from saving bank account, interest from deposits from bank, post office, and cooperative society, interest on income tax refund, and any other family income. In case of ITR, who cannot file? If the person is not resident or not ordinary resident, he cannot file income tax return 1 by using ITR 1. Secondly, if person's income is more than 50 lakhs, he cannot use ITR 1. Third, if agriculture income is more than 5,000, he cannot use ITR 1. If he has taxable short-term or long-term capital gains, in case of long-term capital gains more than 1.25 lakhs, he cannot use ITR 1. If he is a specified employee, like a director of a company, then he cannot file ITR 1. In case the tax deducted at source is as per section 194, he cannot file ITR 1. Now, what the ITR 1 has? The first part, it has about personal information where PAN card, date of birth, Aadhaar card number, and contact details are verified. Then, after filling this, we have to fill the bank details, which are having our salary account or which consist of our major transactions. Then we'll calculate the gross salary, sorry, we'll calculate the gross incomes and fill the details available. After filling details, we'll fill the details about different deductions I'm using under section 10 and section 16. Then what I'll get is income under head of salaries. After this, I'll add income from house property, interest from borrowed capital, and other source of income. Now, when I add all these other source of income, what I will get is total income. Then I'll find out if any long-term capital gain is there, and if it is less than 1.25, it is exempted. But if it is more than 1.25, it is taxable. Then I need to verify the deductions available under section 80. After deduction under section 80, I'll find out deductions under various other sections of 80. Then, after adjusting the deductions, I will find out the tax liability and tax paid at source. If tax is paid at source, then in such case, I need to claim the deduction for already paid tax or advance tax. After deducting the advance payment or tax paid already, if any liability arises, then I need to pay here as income tax return. There are two ways to file ITR one online mode through e-portal, and second by using Excel tool offline mode. So let's me show you the Excel tool also. Now it is not showing any status. Let me check what happened. Okay, let's find out the Excel utility. So in downloads, I have to download this utility. I will extract from the zip file. So this is utility. I cannot go in detail because I need to have details about filing. So once I download this utility, I'll click on continue. Then he will ask me that ITR 1 to 4. It means for first quarter to fourth quarter for assessment year 25-26. If I say yes, he said file return. Then he will ask about download pre-qualified field data and so on and so on. So I need to find out the Excel utility and then I can click here. So if I already file a return, for example, I put my PAN card, then I'll say proceed. He will ask me my password and all details. Now these details are not showing here. So this way I can check my return file. But if I want utility for ITR 1, I need to download from Excel. So I will download for Excel. So this is Excel sheet which I will use for ITR 1 filing. It will take some time to open. I'll just zoom it for your learning purpose. It first shows ITR 1 search. So name is searched. It maintains the conditions here that who can use this. Then I have to mention my name, middle name, and last name. The what are the things which are mentioned in red are normally considered as mandatory. Then after names, I need to add PAN number. I will add my address, my date of birth, state where I belongs, and I will add my nationality. Then it will ask, do you wish to exercise option of 150 opting out for tax reason? Now it means I want to go with the new or old system. Then to estimate your total tax decided which reason beneficial. And I will use income tax calculator for understanding which is beneficial. And then I have to select old or new. Then it says, have your expenditures is more than 2 lakh for foreign travel? I have to say yes or no. Then all these questions I'll ask. Then I mention my email ID here, my mobile number, and status. If I already filed a return, I have to mention the date of return which I filed. If I have revising my return, then I have to write what is the revision notice. Then first I'll mention here my gross salary. Then I will mention the valuation of perquisites. Now this all valuation of perquisites I need to do it myself, or I need to take it from the Form 16, which is received. The Form 16 is a summary of income and expenditure for an individual for a particular financial year. So it will take income or expenditure for a particular financial year. He will also ask whether I have anything income from any other country, that is US, UK, Ireland, Canada. Then he will ask about my allowances and description about exemption part. So he will ask the allowance, for example, if I just click here, the different allowances given, like date, then various different allowances they are mentioned. You just visit the income tax site and see the allowances. After the allowances, here I supposed to write the description and then I have to mention the amount which is taxable. Similarly, I go with the second row for the other allowance. I'll select, for example, I received date come gratuity. Then I have to write the description and amount. If more than two allowances are there, then I'll click here and say add row. Then this Excel will say how many rows and I will add those rows. Then I have to declare the income tax relief under section 89A if I receive. And after this deduction, I'll find out what is my net salary. From net salary, I'm liable to have deductions under section 60 and section 10, as well as for exemption for the amount paid as standard deduction, interim allowance, and professional tax. Then, if I scroll down, I'll find there's a column called type of house property. And if any income received from house property, I need to work out here and find out income from house property. So whatever numerical we solve, I just solve in Excel because this Excel sheet contains auto formula. After that, I will get income from house property here and it is added. Now, in case apart from income from house property, if any other income is there, I have to just mention here. They are given titles like interest from saving bank, family pension, contribution to provident fund, and so on. So I have to claim these other income sources, write description here, and amount in the last column. They are given provision of 4. If I want extra, I can click here, add row, and do the additional work. Then, if I received any pension, I have to mention under section 89E. Also, if I received any other income from transfer, for example, US, UK, and Canada, I'm going to mention here. Then, if I received the pension, then quarterly breakup of pension has to be mentioned. Similarly, quarterly breakup of dividend, if I received any, I need to mention. After that, there is something called as income tax deductions. So there are various deductions given, and I need to mention the amount which I'm doing. Now, if you see the Excel sheet, it has a column called TDS. So when I'm claiming deductions, I need to mention here. The first thing is I have to find out what is the tax deducted by my employer. Then I have to mention my employer's PAN number, his name, the part of income which he has considered for TDS, and tax deducted at source. So this is normally for 4 quarters. If he has deducted additional tax, he will mention here. After mentioning here, we have another details about Form 16, where in Form 16 they mention that on 1st April, 1st May, 1st July, 1st August, they are paid the taxation. Then I have to add details of receipts. That is, we do transaction number for each returns. Then we have to file the details about if any advance tax is paid because this tax is adjusted against our income tax. Now, once I fill these details are automatically shown here. So these are deduction under section 80. Then I'll make a total here about all the deductions. And then I have a statement for exempted income. If I click here, the list is available. For example, agriculture, provident fund, scholarship, and so on. Then again, I'm writing description and amount here. So I'll find taxable income, then deductions, and then exemptions. And after all this adjustment, I will find out the total exempted income. Then I have to work out about capital gain if I'm having here and estimate the capital gain. That is sales price, and index cost of valuation. Then I'll get after adjusting income of capital gain, what is my total taxable income? Then I'll calculate tax, rebate, education cess, and such relief charges. And after all this, I'll get what is my tax liability. If I just click on third tab, I will get TDS details. So this is the final verification that how much tax I require to pay, how much tax I paid, and I'll mention the details of tax paid as serial number, code of bank, name of bank, account number, and so on. And after filing this, I will write my name, my father's or son names, sorry, my name or my son names, then details of my PAN card. And once I complete this Excel sheet, for each tab, I have to click validate. Then once I validate all things, I will create Johnson by clicking here. The utility will create a text file and I have to take the print of text file and keep the record to my side. For example, when I click Johnson, the file will be created as XML. This XML is a security file and this file I can directly upload in income tax portal and file the return. When I say print, it will ask me first to print after enabling micro and filling the details. So this is utility for income tax filing. And this way, we finish your syllabus for direct taxation. In next session, we'll discuss about some of the papers which University of Pune has taken for direct taxation. And then after the paper discussion, we'll finish the syllabus of direct tax. So if any doubt, please either email me, WhatsApp me, or visit me in person. We can discuss and finish it. So that's all for me. Thank you for being patient to participate in the session. We'll meet tomorrow for discussion of question papers. And if any doubt, please ask for that session because that will be our last session for direct taxation. Thank you.